Welcome to the Debrief.
Your no-nonsense look
At the critical talent topics shaping today's landscape.
no scripts.
No sugarcoating.
Only spicy takes, just real insight from across the industry.
I'm Ben Sesser.
I'm Chris Abbas.
I'm Tracy St. Deek, and this
Is the Debrief.
Welcome to the Debrief. Today we are looking at the return of hypergrowth companies with a particular focus on what's happening in AI. So in 2025, AI startups captured nearly 50% of all global startup funding. And that's up from about a third the year earlier. And more than $200 billion has already flowed into the sector, with funding up 75% year over year. So huge amounts of capital coming into the sector. And what's not just striking is the scale, but it's also how concentrated the investment is. So nearly 60% of AI funding went to just mega rounds. So a small number of companies are absorbing huge amounts of capital and a meaningful share of global venture capital. And actually, just two companies accounted for 14% of all VC investment this year, which is insane. This level of concentration is really reshaping how companies scale, how fast they move, how intense the competition for talent is, and many, many other things. And so to kick off, first of all, Chris, how are you seeing this show up? You work with lots of companies across lots of different segments. Would love to hear you, what observations do you have, like seeing this from the outside, day and day?
Yeah. It's really interesting when you like to say those stats out loud because it really is how it feels in the market. I think this is a tale of winners and losers in the market, and companies that are succeeding and those that are really trying to figure out what's going on. And I mean that's shaping the dynamics in many ways. What I'm seeing the most of is how these companies are attracting talent, like how they can compete with their dollars. They can just outspend the other people in the market. I think that it also means they have their pick of talent and can demand a high level of expectation for how people are working. And I'm really seeing amped up levels of expectations across those companies. So yeah, I think a lot of unknown. It's equally exciting, equally scary. Don't know what you're seeing, Tracy.
the change here with these sort of hypergrowth companies is really about scaling. And I think this is why I'm seeing like the talent market get a bit brutal. I mean, all the things that you said, Chris, is some of these hypergrowth companies, they can't afford to pay not just top of market, but top of the top of the top market. And so that makes it, they have a really clear advantage. But I think when the market concentrates in these mega rounds that you were talking about, Ben, companies really do scale differently. So speed in particular becomes like the requirement, like iteration velocity for a product becomes a part of the moat. So what does that mean for hiring? That means I think hiring has to shift from, we're filling roles to you're assembling like really fast strike teams and your hiring plan has to be dynamic. I can't tell you how many dinners I go to with talent leaders and people are like, "What's the biggest challenge with your hiring or headcount planning?" And people are like, "I just wish I had a hiring
Mhm.
plan. I wish I had a headcount plan. That would be nice." And everyone laughs and everyone's like, "Ha ha ha, we don't have hiring plans either." And I think that's that's actually going to become more normal because the needs are changing so quickly in order for the product and the team to be able to keep up with the velocity that we need. And so what we're seeing anyway is lots more opportunistic hires, less, let's go to market for this role and source. I mean, sourcing does become more important, but there's also a lot of, hey, this engineering leader or this exec, met this person and they have a skill set we need and we cannot pass up on. How can we bring them in as fast as possible? And then of course my job is like, and with all of the checks and balances in place to make sure we're not just, jumping at the new shiny thing. So I think also, comp is important. It's necessary, but it's not sufficient. Candidates are increasingly optimizing for the mission of the company, the learning velocity, the quality of the peers they're working with, the access to the tools that they'll be using. Everyone wants to be using the, most sophisticated AI tools in whatever company they're in, and then the brand signal too. And so I think there's a lot there aside from comp and the RSUs and all of that stuff too. So I think it's really interesting because there's so much aggressive spending. The fight isn't just like startup versus startup. It's, startup versus hyperscaler on
Mhm.
pay and tooling and scope and all of those things.
I want to take a step back and talk a little bit about like what's driving this sort of exponential growth and the ton of capital that's flying into this space. But Tracy, when you were talking about everyone being like, "I wish I had a hiring plan," I was imagining like getting one, and it's like this message will self-destruct in 12 days, like invisible ink, and it like just disappears. You're like, oh, I had one. There it is. It's gone. Tracy, we were talking about this before we jumped on the show, but maybe you kick it off in terms of like what you're seeing in terms of the dynamics that make this a little bit different from maybe like
Yes.
previous, secular, trends or shifts that have attracted capital.
Yeah. So I think just helping to maybe break this down in layman's terms, especially for any of our listeners not in tech. So, you know, AI, like other SaaS models, when SaaS has products have been in hypergrowth, software as a service has been in hypergrowth. The normalized state of that is like lots of companies can each build a really good product and they can grow. So you think about it like an analogy like a lemonade stand. You can create a recipe for a lemonade stand, you can sell your lemonade, somebody else can create a different recipe, they can also sell their lemonade, everyone can sort of grow, right? But right now in AI, especially with foundation models and coming from places like OpenAI and Anthropic and Gemini and all of that sort of stuff, it's not exactly the same right now. It's more like a platform race where being slightly better now makes you get better faster. So you have a little bit of an advantage and then you get more and more and more of an advantage, right? Because if you have more compute, you have better data, you have more people using your model's going to learn faster, it's going to improve faster, and it's going to attract even more users and customers. So it creates this snowball effect and the leaders start to pull away. And you're seeing that. I think maybe you said this, Ben, but the stat was like they're, OpenAI and Anthropic took like something like 14% of the VC funding or something like that. Don't quote me on that stat. You can correct me later. But the best foundation model can become this like base brain that thousands of other products are built on. And so the prize for winning is enormous. It's way bigger than second place. And so that's why investors are willing to pour huge amounts of capital into a small number of contenders because the thinking is if you help this one company become the platform that everybody depends on, the upside is massive. And so you really see that in the numbers that you were saying. Foundation model companies raised, I think it was like $80 billion, 40% of all AI funding, because investors are believing that a handful of winners could end up capturing a disproportionate share of the market. And so that's why you're seeing that look a little bit differently than I think other periods of time, even during COVID and other times where you had some kind of hyper growth in SaaS. Would you agree? This is
Yeah, I
really
mean,
lame
I
of
think
expertise.
uh, no, I definitely agree. This size of the prize is a really big deal because it it kind of magnifies like one of the core principles of venture capital, which is the power law. So the power law,
Mm,
for those that are less familiar,
yeah.
it's like a more extreme version of like Pareto principle. That's why VC firms only invest in certain types of companies because they have to have the potential to return the fund, or else it's like a wasted lottery ticket, more or less. And kind of the dynamics that we're seeing in AI take that to like a more extreme level. Because when there's the potential to invest in a company that's worth $300 billion or $500 billion, which is like OpenAI's territory these days, then even investing in a company that could be worth $2 billion kind of seems like a bad idea if you can get in those deals. And so more and more capital is chasing fewer companies for that reason, right? Like it's math, right? That's where they're most likely to get the return. And then as they raise more capital, their ambition has to be bigger, right? So the more capital you take on, the bigger valuation you have to ultimately achieve to pay back your investors. So that's why you see, it's astonishing to look at a company like OpenAI and they're like, we sell foundation models, we build vertical apps, we're building like a healthcare thing over here. We're doing like so many products in so many spaces because, and we'll get to this later, they have to generate just enormous amounts of revenue to make not just the venture capital dollars pay off, but the capex that they're investing. And then I think Tracy, you hit on one more really important point in this space, which is like the king making, which means um, companies are raising a lot of capital or investors pushing a lot of capital to a small group of companies. One, to give them actually a competitive advantage in a world of like you know insane racing, but also it's a signal to the market, that this is the winner in legal AI. Like they've raised $500 million. Choose them. And like that success begetting itself. So long-winded answer, but I think you're absolutely right, Tracy. And it's a magnification of venture math that we've seen for a long time, but like to an extreme level, and
Mhm.
actually has a whole bunch of implications that are probably not in scope for this conversation for like
Well,
entrepreneurs and people starting companies.
Yeah, but I mean, and then to bring it back to the talent piece, which Chris mentioned too, it's like then, they're raising all this capital, they can afford and they should be investing in top tier research, but also top tier talent. They're winning the best talent on the market. That's a place where more talent is attracted to, so it's like sort of a self-perpetuating, self-fulfilling cycle. You're getting the best of the best, and therefore you keep getting the best of the best. And so I think that's really tricky for other companies that aren't these hypergrowth companies to really compete with top talent, especially niche AI ML talent that they might need. But I think it's really interesting just to see like, those companies are going to keep getting the advantage because it is like this snowball effect.
Mhm. But the way that they're bringing talent on and managing the talent, I feel is so different. And it'd be really great to see what everyone else is thinking because gone are the days where that money was being spent on slides and ball pits and snacks, all right, and your laundry. Now it's like I'm going to give you huge earning potential, but you're going to be, we're going to be very clear on what our expectations of you, and if you don't hit them, you're out. And there's this very hardcore approach to um, like managing employees right now that is totally different. And I think it's changed very quickly from you know being this like very soft culture of like inclusive, everyone's here, we're all friends, you go to the ball pit and you have a nap in the office but in the nap pod, and all this kind of stuff, which it sounds crazy now, but that was not long ago, right? And then now it's like completely flipped to high performance kind of high reward. um
Yeah.
and I think that's a really interesting kind of thing for us as like people are bringing people into companies, because that really changes how we assess people, how we kind of position culture, um, and and the implications that that has.
I was gonna say, if you have
Yeah.
time to like take a nap in the nap pod right now, then you are basically out of there.
Yeah.
Like, unless you've created a digital twin or all your work for you, and you can prepare events. Like, that's not happening. Yeah.
I think the other thing that's interesting about these like hyperscaling AI companies is just, um, and I don't know if I have like a full handle on it. Like they scale differently from a, headcount and hiring perspective. Meaning, let's go back to the cloud analogy. There was all these software companies that were spawned from like 2000, 8 to 2018 or 19, and a lot of them looked pretty similar in terms of composition and ratios. And there was like these playbooks that were built on, you need this many people in sales and this many customer success and support, and then and the eng ratio to design is this, and like kind of people running these models on, headcount models on these giant ratios and numbers that were sort of established. And those are like totally out the window now. One, people are not kind of wedded to the numbers of people they need. In fact, like it's like these are companies that take pride in not doing that, saying like, no, we're going to automate. I mean, Tracy, you can speak to this and use AI. Um, and then just, yeah, the roles are not necessarily the same, right? These companies, the way they operate is not the same. The way they service customers isn't the same. And so I don't know, Chris, if there's anything that you've observed kind of serving companies where I feel like previously you'd be like, oh, I'm working with a SaaS company. We're going to help them hire salespeople, customer success, some software engineers,
Yeah.
the occasional, marketer or DevOps person. But like we know the ratios. And now, do you have a handle on what it looks like in, the hyperscalers?
Yeah, I mean, it's totally been thrown off. What we're seeing, and this is my theory anyway, we're seeing a massive over the last kind of 18 months, a massive surge in GTM hiring, overall or
Mm.
overall other types of hiring, and that's flipped from being very kind of technical focused hiring. Like in 2020 to kind of 2023, 60% of our hiring was technology, and that's flipped completely to GTM, like flip the other way. And my take on this is, AI is ironically making software engineers more productive at a dramatic rate, with co-pilots and Cursor and all those kind of tools. What is really hard to replicate is good salespeople with technology, and that's still a very human and buying from a person relationships. So that's been the big dynamic I've seen from a hiring standpoint and the kind of ratios of hires in companies.
What's the payoff for all this investment in AI? And we can get into that. Software engineering has been like the best case in point of like, that's a good one. That's a good use case, clear value, productivity, and sales. there's just not a lot of companies that I've spoken with that are like, hey, we implemented a whole bunch of AI tools and like don't need those, don't need those folks anymore. Like, no, like, and of course, we do our own, implementation, experimentation, et cetera. On the margin, there's so many use cases where AI is valuable in that field, but it's not at the level of augmentation or acceleration, like not even close to engineering. I don't know, Tracy, what you've seen at
Yeah.
Zapier.
Well, I was just gonna say I agree with what Chris is saying too. I think like, people have companies have invested heavily in building their products and now they need to go out and sell them.
Yeah.
So this like honestly makes a ton of sense to me too. I mean,
Mhm.
I still think, and it depends on your company, right? It's like for certain technical roles, there are skills that are still very rare, especially if you're at an AI company and you need those more niche skill sets. And so that's a very competitive market in terms of hiring, but then also in general, and outside of specific roles like AE roles or things like that, in general, I think the profile that people are looking for in candidates right now is a lot about adaptability and the ability to learn quickly, but also continue to expand scope because hyper growth doesn't have to mean hyper growth headcount. And I think you said this, Ben, automation and AI, and specifically AI orchestration, lets teams grow output faster than they have to grow people. And so even though we're seeing hyper growth in the economics, we're not seeing the same hyper growth and like I need to now hire 50 more recruiters so we can hire, triple in size in 3 years. I don't think we're seeing that at all.
Mhm.
Teams are definitely growing, but you're still seeing contraction in the market, both because talent teams can do more with less because we're learning AI and automation and orchestration as well. But then also every team that you're hiring for can learn to do more with less because of this technology as well. So I think that's also a difference that we're seeing here is what does the hyper growth mean for headcount and things like that. So I think that's been pretty interesting. And I also think that, we have a lot of philosophies. I mean, at Zapier, I think we punch way above our weight in terms of the number of people we actually have on staff and the number of productivity that we have with agents and things like that. So more companies are doing that. And I always say, a lean team now is the new flex. It's not how many people do I manage, it's how much work can I get done with the smallest number of people. And that is impressive.
Yeah,
So that's different.
it's like revenue per employee is the new standard, right?
Yeah.
It's interesting, you know, with all the focus on the tech and building and AI, um, this comes back to the king making. Like the king making is also so important because when apps can be built so much faster, when there's so many more products proliferating market, then cutting through the noise and having, just getting awareness and driving like actual distribution successfully to like break out, particularly when the bar for breaking out is like orders of magnitude what it used to be, which I can talk about if that's interesting or helpful. But so like that's where product marketing comes into play. That's where freaking billboards come into play, right? And sales reps, like, so it's interesting, Chris, your observation on the, big focus on GTM, because you think about it, proliferation of apps, tons of noise in market, like having to hit a pretty high bar in terms of growth, like that's where the dollars are going to go because, um, that's what's going to get you to the next, level of funding and allow you to sort of like hopefully separate from the pack. And I think like the buying side would complain that, you know, maybe there's too much emphasis on that, and it's they're getting sold like a little bit more, promise than reality in some
Mm.
cases because it is so easy to get to like a 70% solution that doesn't really solve a customer problem or get you all the way there.
So I think this is really interesting because there's a lot of people way smarter than I that talk about this AI boom and AI bubble and could it burst and if we're concentrating so much of our investment in a much smaller number of companies that makes it worse. I'm not the expert on that, but I think what's really interesting is like this idea that is the industry building way too much AI infrastructure, like the data centers and the power and the chips and all of that, assuming that companies will adopt AI fast. And I think a lot of companies are, especially in tech, but enterprise adoption in particular might move a
Yeah.
lot more slowly. If you think about big companies like banks or healthcare, government, like they often buy very slowly because of security reviews, compliance, procurement, change management, integration work, all of that. Like I've been talking to a lot of people and TA leaders lately in the enterprise spaces where the interest and leadership investment in AI is very strong. But then they say, but getting this through legal, security, IT, whatever is really tricky and it's very nuanced based on your company's risk tolerance, industry, all of these things. And so I wonder if we're, doing the equivalent of building 10 new highways because we think traffic is going to double or triple next year, and then traffic only grows a little, and we just spent all this money on empty lanes.
Yeah, I mean, there was I think like the first piece that kind of focused on that was a couple of years ago. It was like 2023. It was a blog post by this partner at Sequoia, David Kahn, and like the blog post was like the $200 billion question, and basically did some math at the time. I think at the time there was like $50 billion in sort of like data center runway from NVIDIA, from like investment in AI. And his math was basically, okay, well, every year of that investment has to return like $200 billion of like lifetime revenue for it to make sense, for it to pay off. And his math was that there was like a $125 billion hole. So at the time, that was like a $50 billion total capex in AI. And just to put that in context, last quarter, Microsoft spent $40 billion on AI capex. And so like total capex this year will be like 500 to 700 billion, which implies that to like return that investment, to get a return on that investment, you think about like margins and all that, you need trillions and trillions of dollars of lifetime revenue off the back of that. There's just not that many industries that are trillions of dollars in revenue. And so that's the big question, is like, where's the revenue come from, to pay it back? And obviously companies like OpenAI, Anthropic, et cetera, their revenue is growing at explosive rates, but it's not trillions, right? It's billions. So yeah, there's a lot of, belief that you need to have around the amount of economic value that's going to be created, and like, where is that going to come from? Is it going to be, displacing labor? Is it going to be taking over healthcare? Like, there's only so many industries that can like suck up that, that amount of capital that can generate revenue to return that capital. So to your point, Tracy, like, it's a big open question.
I do think it's very clearly going to transform how we work. I mean, we're already seeing just amazing things that you can do, amazing amounts of time that you can save. I'm yet to really see something that gets close to replacing an employee in production. The closest thing I can see is coding tools. That is really our CTO is able to, do the work of multiple engineers. He's actually said he's declined budget for hiring because he thinks it's easier for him to just use this tool, right? Than onboard someone and teach them the code base and all this kind of stuff. He's just like, no, I'd rather spend more time doing this. So I think that's where I'm seeing like big amounts of change, but not quite sure I see it anywhere else, like in my everyday. So maybe when that happens, it'll become more real. I don't know what everyone else is seeing.
By the way, Chris's last comment doesn't bode well for the future we hope for, where companies are going to be like upskilling all these junior people, spend time trying. It's like, that's a lot of work,
People are a lot of work.
This AI thing doesn't, didn't talk back. If it does, I just, tell it not to.
Yeah. ChatGPT tells me how great I am, and I'm very
yeah, true.
Should we finish out with some rest of the spicy
Let's
takes?
do it. Yes. Okay. Spicy take. Yes.
Can I have one, but it's like a totally different direction than anything we've talked about. Is that okay? Okay. So mine is, it's maybe a spicy question, and maybe not I don't have a strong opinion on this yet. So I think that these mega rounds are turning startups into unicorns sometimes overnight, which is interesting because then they're skipping the normal company like maturation stages. And so I'm curious if we will see, some companies that maybe have younger, less experienced, first time founders, if they're gonna stumble, or if they're surrounding themselves with the right people and the experience to build a truly enduring company. I mean, if that's even the goal, maybe it's not. Maybe it's just about like quick exit strategy. So I really wonder how those founders are going to think about talent. There is a well-known startup in the hypergrowth right now, and they have probably brilliant, but I know younger founders, but they've hired a really tenured, very well-respected leader over talent acquisition. And that gives me a lot of hope for the lessons and practices on talent, at least, that some of these hypergrowth companies will start to build into their foundation as they grow. So I think we could see a lot of companies fumble because they just don't have as many of those lessons learned that I think some, larger companies do. Or they could do the right thing and surround themselves with very, very experienced, very respected people who can ensure that they're building a strong foundation and build a truly enduring company.
I think one of the interesting, to your point, like one of the interesting paradigms, these are household names. They're raising tons of capital. But if you've ever been a company, it's hard to build like an organized operating rhythm when your business is straightforward. Like, hey, we sell
Yeah.
software and there's like 5 functions and like we got to meet monthly and quarterly and like keep everyone aligned. When you're playing offense on 19 different or probably 100 different fronts, different products, different directions, like the amount of chaos that is, internally happening, I'm sure, at
You
the
know this
most
better than
influential
we do, Ben.
companies, like it's just,
My spice take here is that the fundamental truth is the difference between the best companies in the world and the average companies is still human beings. And I think companies are in danger at the moment of treating humans like robots. And I'm seeing that all over the place. I think it's going to really turn to bite these companies over the long term. Maybe they can do it now, and maybe forever they're going to be in control from this date forwards. But I feel like if at any point, I'm just waiting for the point that talent become in control again. If that happens, I think it's going to be a bloodbath. I think it's going to be like, I think the companies are not going to know what's hit them. And I'm talking in like broad brushstrokes here, but I think you've definitely seen from the kind of 2023 like layoff wave, how companies treat their employees has really changed. And the
Mhm.
transactional nature of employment has like gone through the roof. And we saw it, Amazon, lots of other companies making these like huge layoffs. And I'm very interested to see if that dynamic changes and what happens.
yeah. I guess my spicy take is it's definitely just to bring it back to talent. It's hard to compete certainly for the top tier, most technical talent in a world where, the pay packages are, eye popping. And even for the folks that are just getting into these hyperscalers because um, they're allowing folks to cash out along the way, like in a way that wasn't necessarily happening before. So there's actually like a near term kind of payoff to be joining one of these companies. But outside the folks that join those companies, because so much of the venture dollars are getting concentrated in a fewer companies, and the bar for like getting off the ground as a startup is really hard. Like if you're not doing like $1 million in revenue a month in 12 months, you're like slow. Whereas 4 years ago, if you did a million in ARR the first year, it was like amazing. And here's your Series A. So I think there's gonna be really good talent that's gonna almost get turned off from
Mm.
starting companies or try to start and hit a wall and then realize like, hey, this is I gotta land somewhere. So I think there's gonna be a lot of entrepreneurial talent that's gonna get like kind of turned off in the venture market. And there'll be an opportunity for companies to hire those folks, and you'll get really smart, really ambitious folks that just want to be able to build and work on interesting problems and be successful. That's my
Awesome.
that's my
I like
spicy
it.
take. Thank you for listening to the debrief. If you like this episode, hit like and follow the show so you never made an episode. More hot takes, real talk, talent insights coming your way. Next time, tune in and get the debrief. Spotify, Apple, other platforms I'm not aware of. Follow us.